Morning traders, Paul here with GammaEdge. Today is Wednesday, the 27th of July. Let's get started. Pause your players, please. Read this. Important to you, important to us. If you agree to what you read, hit the play button. Market model is continuing to show bullishness, but under pressure. You've got what we call the ribbon or the historical moving averages, and you can see they're starting to curve over and flatten just a little bit, and that's because the instantaneous cumulative tick here in white is getting weaker and weaker on a day-over-day basis. We are making new lows in a short-term sense on the instantaneous cumulative tick. In fact, yesterday we had a short-term CT down signal, which opportunistically you could have used had you been following this in real time to place some negative trades or shorter trades on. What we are looking for now is a continuation of the long pattern. What we don't want to see is the instantaneous white CT cross into the historical moving ribbon. If that does, that will start the zeroing of the long signal and start moving us towards a short signal. And if the white CT moves out of the bottom of the ribbon, that will completely turn off the long signal and will move us into that shorter time frame or short positioning. Note we have what we call a railroad track down. That is a confirmation that you can play this to the downside. It's a very clean, we've tested this, it's a very short-term signal, intraday signal, but it's one way you can look at this. Taking a look at the SPX, here I've got the combo, which is the AM settled and the PM settled combined into one indicator, into one set of graphs. Here the AM is the monthlies, here the PM is the dailies and the quarterlies. What we're seeing is an increase in net negative gamma, as well as an increase in net positive gamma, but we're still dominating on the net negative gamma side. Now, this is a composite. This is a combo of both the AM and the PM. Why this is important, the AM is relatively unchanged yesterday, which is your institutional money. They're just coasting ahead of FOMC for the most part. The PM settled. We did see call gamma go in, so some short-term call gamma and some short-term put gamma go in. We are still maintaining a dominance on the call side, but note the slope is less, and what we're starting to see is a slowing of this positive condition over here in the PMs. And that in part I think is feeding over here into the combo. Why this is important is that if we get this dominance on the negative side, that'll negate what we call parity, and that will start indicating that we really are under pressure, downside pressure, and we should be looking intently at what our downside levels could be. Levels for today, want to call your eye to a couple things. We closed at 39.21. The expected move today is much higher than what it's been the past couple days. This is partially due to the purchase of downside puts, and that's raising implied volatility, which is pushing our numbers up here for the EM. Also want to call out over here on the 4,000 strike. We have lost that neutralization that I talked about yesterday, and if you don't understand what we're talking about there, in order to advance above the 4,000 and the 4,005 strike, we've got to see some neutralization here. Doesn't mean we can't push higher, but it means it's more difficult to push higher and hold, and you can see there's a lot of net negative gamma above us in the combo complex. We are not optimistic of pushing aggressively north. Doesn't mean it can't happen, but right now our bias is to the downside, and that's because we're actually neutralizing lower, and we're actually seeing some of these levels start to develop in a shorter positioning type of condition. The PM complex, which is literally all of the 0 DTE, 1 DTE, 2 DTE. This is all of the what I would call more trimming or retail trading that goes on. A couple things to draw your eye to. First of all, influence from the PM settled complex. You can see a very weak transition here at this 39.35, 39.40, still very indiscriminate in this area. The delta notionals due to the PM complex are back and forth, very noisy. Down here at 39.10, this is the long puts, which will roll at the end of this week. You can see a downside target is 3,800. So any contributions from the PM complex are going to come basically in support and move towards 38 or a push upwards towards 4,000. Note the JPM short calls that expire and will roll in September are already becoming quite dominant, and this is the level I was talking about earlier that has to be neutralized for us to push higher and hold. We're not seeing it at this point. Taking a look at the 0 DTE for today, every day is a 0 DTE in the SPX. This 39.50, 39.55 is the top of a transition, fairly clean. I like to see that. Just be aware of this one clean transition here. The 39.10 on the 0 DTE is also another transition at the bottom of the range here. Below the 39.50, 39.55, you can see for all intents and purposes, we are net negative gamma. And so the deeper we go here, most likely the deeper we will go. We'll see. You can see there also is some liquidity from the 0 DTE that will provide some stickiness as we drop through this. I'm not anticipating that we get anywhere near the 38.50 level into the close, although we could test it certainly intraday. The overall expiry today is a little more significant in size, not great, but it is a little more significant and something to pay attention to. The combo, which is the AM and the PM settled, the key thing to take away is we've added a significant amount of net delta here that is basically, this was near zero yesterday. It was in the millions. Now it is at 22 billion with a negative sign in front of it. This combined with what we see up here in the 4005 strike is going to make it very, very difficult to cross this area. There is also a lot of transitory delta back and forth on the sign changes here. This is not a structure that is very supportive to a rapid advancement upward, nor is it supportive to a rapid advance downward. So again, expecting more choppiness. We've got this weak transition that I'm calling out here, negative gamma here. We've got the 39.10, which will roll at the end of the week. We've got the JPM up here at 4,005, which we're trying to neutralize. And we've got this COI and POI coincidence, which has continued to persist, and it's playing havoc on these numbers. But note, we've lost a lot of positive gamma here at the 4,000 strike compared to yesterday. Go back to yesterday's presentation if you must. And because of that, again, I don't think we're rapidly moving up. The SPX structure looking weaker. We reduced a significant amount of gamma here at 4,000, which was the dominant GEX strike yesterday. It's moved up to 4,200. We've also shifted up just a little bit in the complex to 3,800 from 3,600. You could view this as perhaps the entire complex is moving up. I do not view it that way. I view it as we actually are starting to see a little bit more weakness creep in, and the reason I say that is when we see the overall complex move up, normally spot price is moving up with it, and spot follows the complex. Right now, spot is going against the grain. Spot is moving down, and we're starting to see the emergence more of puts going in, as you saw in the wing charts, and we're seeing weakness here develop with a push up of plus GEX up into that 4,200 range. So until we can neutralize this, until we can push up into this this area and start building call gamma, short-term call gamma in this area, it makes it very, very difficult to stick and hold, and we're just not seeing it at this time. So what's the summary for today? So the short-term trend is down. You saw that in the instantaneous cumulative tick. It is threatening to fail if we lose the position above the ribbon. So keep an eye on that. We have tools in TOS, TradeStation, and in TradingView for you to watch this in real time. Different presentations, but you'll get the same idea. The daily changes in the wing charts are showing that short-term puts are being added and calls are being added too, mostly from the PM structure. The AM structure, which is the institutional, or we believe is the institutional money, is sitting on their hands right now, ahead of the FOMC most likely. Our bias is somewhat downward if we cannot retake the lower transition. And what I meant by that is this lower transition area. We've seen a lot of weakening in this area for a very little move down here. And then finally, the JPM long put leg does roll at the end of this week. It's going to be interesting to see what happens, what kind of release. If we remove a lot of that gamma that's down there, we could remove some of the support of the floor and retest that 3,900 level. Contrasting, if that money does roll up to the 4,000, 4,005 area, that could be beneficial to neutralize all that net negative delta, and we could, create that bridge to move higher. So that's it for today. If you like today's content, come join us at GammaEdge.us. We've been having an influx of new folks and really like to get all the questions that are coming in. It makes us better, and hopefully it makes you better. So go to our sign up page, click on the pricing tab, register, come on in for a 14-day free trial, all the tools turned on. A lot of great traders, all experience levels, all different portfolio sizes, etc., etc. Follow us on Twitter at GammaEdges with the S, please. And then here on YouTube, of course, smash that like button if you like today's content and think you'll be able to apply it. And then, of course, follow us if you're not, so that you get notified next time we post something. So with that, make it a great hump day. We'll see you in the Discord. Thanks, everyone.